Good morning, everyone. Apologies for the informal background behind me. Um, I'm stepping in for my colleague and partner Tom Zuber, who unfortunately it had to be called away at the last minute. So I don't have quite the planned background that I would have. But on behalf of the Cannabis Society and Zuber Lawler and Del Duca, welcome all of you, and thanks for taking the time to join us today. I actually returned literally hours ago from a different cannabis conference with Graham. So, hi, Graham. And I see many other familiar faces who are going to be talking today. This is the first of the virtual conferences that I've been part of, and I'm really looking forward to learning along with the rest of you. I don't think I have to tell anyone on this call that this is an extremely exciting time to be in the cannabis industry. And that's involving good and bad news, right? If we look at the bad, I think we're all painfully aware about the vaping-related one illness outbreak that happened this summer and has tapered off over the fall. But it was significant enough that it earned at least two acronyms, vaping-associated pulmonary injury and e-cigarette product use-associated lung injury, excuse me. So VAPI or EVALI, I believe they're pronounced. As of last week, there have been, in the US, 47 deaths and over 2,000 other victims with health consequences that are likely to last the rest of their lives. We've seen the CDC get involved in identifying vitamin E acetate as the primary likely culprit, although there are other possibilities as well. And I think many of us who are directly involved in the legal license market are really seeing this as a call to arms to protect the public. That said, that legal license market is facing increased economic pressure from the market itself and from regulators, among other sources, combined with a patchwork of regulations in which some local governments, frankly, continue to treat the industry as the enemy, even in states that have legalization overall. But there's also a lot of good news, and I think even more than that, there are portents of greater news to come. The House Judiciary last week passed the Marijuana Opportunity Reinvestment and Expungement Act, or the MORE Act, which opens the door to potential descheduling as early as next year. My colleague Tom, were he here, would probably be saying he is confident that the Trump administration is going to see the benefit to legalization during an election year. I'm a little less sanguine about that than he is, but maybe it's just that I'm older and more cynical. But I see it as more of a question of where those votes would come from and which votes he might lose. But I do think that there is certainly a strong possibility that we will see descheduling in the US next year. And I think we're all hoping for that. On top of that, the full House of Representatives had passed the SAFE bill, the banking access bill, about 2 months ago, and that's also waiting for action, for action by the Senate. But in the meantime, while the federal government continues to move at its usual glacial pace, U.S. states and frankly other countries aren't waiting. They're legalizing medical use and to some extent adult use as well. I think the two big changes, the two big state changes in the U.S. this year are Utah, which I think shocked just about everyone given the role of religion within that state, and also the overwhelmingly conservative political environment there, and Oklahoma, which I've taken to calling Toklahoma, given how quickly the medical practice has come up in that state. Frankly, with those two states going, I was down in a meeting of federal judges and litigators in Texas about 6 weeks ago now. Well, actually, more like 2 months ago, time goes. And they were all bemoaning the fact that both Utah and Oklahoma had beaten them to the punch. They were quite shocked that they were going to be that they were going to be behind those two states. So that's an overall picture of the overall scene. But let me talk a little bit about Zuber Lawler and Del Duca. For those of you who don't know us, we represent a long list of Fortune companies, funds, government entities of all sizes, from our offices in LA, New York, Chicago, and Silicon Valley, where I'm head of the office. We focus on intellectual property, M&A, other deals, FDA and other regulatory work, and a lot of litigation. We often work internationally, and our attorneys work in languages that cover about 90% of the world's population. We think that we're unique because there is really no other firm that does the other non-cannabis work, the traditional company side representations that we do, for the companies that we do it for. That has been working in cannabis for even a few years. Most of the other kind of general purpose firms who've come to this industry recently have done so, frankly, opportunistically. They looked for this opportunity to come up. And not there's anything wrong with looking for opportunities, but they've waited and they've gotten in as it looks like things are moving forward towards federal descheduling. We got involved over a dozen years ago because, frankly, there were friends of people who were involved in founding the firm who were getting involved in the medical cannabis space and who needed competent representation from people who actually understood corporate issues, not just criminal law. And that puts us into a unique perspective where we know business and we know cannabis, and it gives us a position to aid our cannabis clients and frankly our other clients in growing their value across borders and throughout the world. So it's not surprising that we represent many of the leading brands in the cannabis industry, and we don't have time to put up a slide for that. But as examples for some of the cutting edge of work that we're doing in the cannabis space, we've obtained meaningful federal trademark protection for cannabis brands. We got the second ever issued US plant patent for a cannabis strain. We've done a lot of M&A and finance for leading cannabis companies here in the US and in Canada and around the world. We're doing deals for cannabis companies based in the US, Europe, South America, et cetera. And increasingly, we're handling litigation pertaining to major cannabis brands and companies, including representing California's licensed industry and preparing the lawsuit that many believe drove Weed Maps to capitulate and agree to limit its listings to licensed retail. Now, speaking for myself personally, seeing this industry evolve and legalize is incredibly rewarding. I've actually been practicing law for 2 decades, a little bit more, scarily enough, but it was only after joining my law school classmate Tom Zuber and the rest of the firm earlier this year that I got the opportunity to practice in cannabis law. I tell people that my mother will tell you she's happy my adolescent interests finally have a practical application, but not necessarily the way you think. It actually happens that 30 years ago, I wrote my undergraduate thesis about the war on drugs as a political phenomenon. I did research, what was at the time, very primitive data analytics, but it was what you could do with a CD-ROM setup that looked at the coverage, news coverage of the war on drugs, and established it was tied directly to federal electoral cycles rather than to any actual objective measure of injury or danger. My conclusion based on those data was that it was fundamentally an opportunistic war on communities of poverty and color that was waged for political gain. Now, if you'd asked me then whether 30 years in the future, we'd be on the verge of bringing cannabis fully out of the shadows and into the mainstream of corporate America, I've always been an idealist and an optimist, so I might have believed you, but I think I probably would have been one of the few. My wife is fond of the saying, if you want to go fast, go alone, but if you want to go far, go together. And I think if you look at the list of people who are going to be speaking with you later today, you're going to see a group who's going to go to the distance. So thank you all for taking the time out to join us, and I look forward to participating for the rest of the morning. Thanks.
Thank you, Josh. We are going to keep your camera online because we're going to move into introductions. But of course, you've already introduced yourself. So we're going to move into introducing the rest of our panelists. And at that time, that's when I'll be adding the video. So without further ado, I will start introducing everyone. I'm going to start with Adam first. So your audio and video will be turned on, Adam.
Good morning, everybody. Can you hear me? Yep, all good. I'm Adam Guskich. I'm the CEO and co-founder of MediGrowth Australia and director and co-founder of MediGrowth New Zealand. We're a vertically integrated cannabis company with operations here in both countries, an ODC licensed manufacturer. A vertically integrated model, very much focused on extraction, and we are looking to be a large-scale extraction and manufacturing company in both Australia and New Zealand. So we're somewhat, I guess, early stages in Australia compared to much of the rest of the world, but equally we've been involved in the industry here since 2017. So we've seen a number of changes here in Australia, and we're very excited to be part of the industry and excited to be here today. So thanks for having me along.
Thanks, Adam. So your camera is going to stay on moving forward. Next up, we'll have.
Thank you.
Next up, we'll have Ben from Canopy Rivers.
I think I hear a cell phone going. Hey everyone, Ben Fitzgerald from Canopy Rivers. I'm currently working on the deal team here, and essentially Canopy Rivers is a venture capital firm that specializes in cannabis. Canopy Growth is our largest shareholders, and what really differentiates us is we look across the entire value chain as minority investors. So to date, we've made investments from cultivation, tech media, software, ancillary, the consumer packaged goods space, and getting our feet wet into biotech and plant sciences. So we're fairly flexible. We do take a globalized approach. We made investments from seed all the way to later stages. So we do believe in the operators and think of us more so as strategic partners, because we really do believe that the operators should be the ones scaling their companies. So that's a bit about myself and Canopy Rivers.
Thank you so much, Ben. Next up, we have Jay McMillan from Hexo.
Good morning, everyone. My name is Jay McMillan. I'm the Strategic Vice President with Hexo. We are a licensed producer here in Canada. We have been in business since 2013, fully licensed since 2015, first in the medical space and now in the recreational space. Our focus is obviously in bringing cannabis products to market, both in Canada as well as internationally. We're currently expanding into the US, and our operations provide us with a large cultivation asset in Canada, but we partner largely with commercial packaged goods providers around the world, in addition to bringing our own core Hexo products to market. It's a slightly different business model, if you will, in that we're operating to really normalize cannabis as much as possible and really bring it out into the forefront and provide that ability for consumers to be able to have options on how they consume, whether that's in a beverage or in some form of an edible form or whatnot. Super excited about Cannabis 2.0 here in Canada. That's just coming around to being able to launch products out for the edibles and beverage market space, but also very excited about the CBD offerings and what we can do into the US marketplaces as well as Europe and Latin America. Looking forward to today's discussions. Thanks.
Thanks, Jay. Next up, we have Chris Crane. And he's from Forefront Ventures.
Okay, hello, sorry about that. So hi, my name is Chris Crane. Excuse me. I'm the president and co-founder of Forefront Ventures. We are a multi-state operator here in the United States, currently operational in 9 states, all across the country, a bit heavier focus on the eastern half of the US, but also some operations out west. We operate across the vertical, so we do cultivation, production, retail. We recently completed a merger with a publicly traded company called Cannex, which took us public on the CSE in Canada. It also made us the largest producer in the state of Washington, where we currently do 8% of the wholesale volume for the entire state of Washington, a state with about 1,000 licensed producers. So quite a highly competitive market where we've managed to figure out how to do really good quality, low cost production at scale at a level of efficiency that we don't see a lot of in the industry. We think that's allowed us to really dominate in the market with massive downward price compression. And it's an operations model that we're now bringing to other states across the country. We have also done quite a bit of consulting work in the past across the US, helping folks win licenses and set up operations. And we've done a little bit of work internationally. We currently have a license in Colombia, which is not operational. And I've done some work personally in Europe, including involvement in a project in North Macedonia. So a little bit of experience in the international side, but our focus is very much on low cost production for good quality products in the US, as well as a great retail experience through our Mission brand, which is currently operational in 7 states.
Perfect. Thank you so much, Chris. Up next, we have David Friedman from Panther Capital. I think we might have some technical difficulties, so I'm going to move on to the next person, and we'll.
Yes, I think you can. If you should be able to unmute David.
Hello, can you hear me?
Yes, you're coming through now, David.
Okay.
Great.
Yeah, I didn't have this screen up before. It just came up now. Sorry about that, guys. So yeah, as Jess said, my name is David Friedman. I'm the CEO of Panther Capital. I've been in the cannabis space for about 6 years. Prior to that, I was in early stage venture capital in the tech sector for about 20 years. My funds have made probably 20 investments, primarily in the ancillary side of the space, only a couple of plant touching deals. And I have operated, I'm now on my 3rd operating company in the space. I operate portfolio companies from time to time, depending on the needs and the situation. So we're active on a number of levels, and glad to be here.
Thank you, David. Up next, we'll have Justin Cooper from C6 Capital. He's joining us via phone, unfortunately, because his video isn't working. Justin, can you hear us? Hopefully he'll be able to join in a second. Justin, I'm going to leave your mic on if you do hear us. I'm going to move next to Matt from Tech&In Capital.
Hi. It looks like I'm having a little bit of video issues as well, but hopefully you guys can all hear me. My name is Matt Rosenberg. I'm an investor. I manage Tech&In Capital. It's a family office that I started after exiting a software company that I founded a number of years ago. I was previously a management consultant. At this point, I invest mostly early stage, seed, and sometimes pre-seed, and occasionally Series A. Mostly technology, some cannabis, and I also advise a select number of companies in the private and public sector, public market, excuse me. And so my interests, I have a medical degree, and so I came to cannabis through the healthcare aspect, but have become much more interested on a professional basis in the consumer perspective. So excited to be here with all of you, and look forward to learning from everybody.
Thanks, Matt. Up next, we have Melissa from Ananda Developments.
Thanks, Jess. Melissa Sturgis, Ananda Developments in London. We're one of the primary movers in the space over here. We listed on the small Next exchange a couple of years ago and made a few investments so far. Pretty deeply embedded into the Israeli medical research space, have invested in some ex-British American tobacco guys who have a really interesting vaping tech, and have recently just partnered with the farmers who grew for one of the large pharmaceutical companies over here, who grew their high THC cannabis. We've just partnered with them to apply for one of the first growing licenses over here. So as I said, one of the early movers in the UK space. So some interesting insights on capital markets and access to capital over here, I hope. Thanks, Jess.
Thanks, Melissa. Up next, we'll have Patrick Berry from Granite Hall. Sorry about that, Patrick.
Hey, hi, my name is Patrick Berry. I'm the Chief Investment Officer of Granite Hall Partners. Can you guys hear me?
Yes, we can hear you.
Okay, great. Sorry about that. Anyway, my name is Patrick Berry. I'm the Chief Investment Officer of Granite Hall Partners. We are an alternative investment firm, have been around for about 20 years, and have been investors in the cannabis sector since 2016. We've partnered with both multi-state operators as well as smaller brands, technology companies. We made investment on the intellectual property side of things. We've recently made our first debt investment in the hemp space. So we are enthusiastic supporters of the industry and some of its companies, and delighted to be talking with everybody today.
Thanks, Patrick. Up next, we have Peter Luber from Marin Financing.
Can everyone hear me?
Yes, we can hear you.
Oh, good morning from California. I am a managing partner at Marin Financing. We are a lending fund to the industry. We are a secured lender, and we lend across the entire value chain. We predominantly focus in California. That is where our lending license is. We lend to private companies, public companies, just looking to provide critical working capital to the industry, and we permit what is a capital intensive industry. We permit companies to leverage their asset base and add debt to the capital structure and create a more efficient capital structure. We have been around for 3 years, actively lending for 2. We've got a decent amount of dry powder and a lot of interested investors in the space. So it's a very exciting time.
Thanks so much. Next up, we have Patrick Morton from Supreme Heights.
Hi, everyone. Yeah, as she just mentioned, I'm the CEO of Supreme Heights, which is a venture capital firm focused on investing in early stage CBD branded products in the UK and Europe. We're majority controlled by Supreme Cannabis, which is a mid-sized vertically integrated Canadian LP. Thanks.
Thank you so much. Up next, we have Ronnie Jagerman. Ronnie, can you hear us?
Yeah, can you hear me?
Yes, we can.
Okay, my name is Ronnie Jagerman. I'm an investment banker out of Israel. I specialize in leading and raising funds for Israeli cannabis companies outside of Israel.
Thanks, Ronnie. Up next, we have Sood Agarwal. And I will promote you just 1 second. There you go. From Canvlight.
Hello, everyone. I'm not sure if you can hear me yet.
Yes, we can.
You can, great. My name's Sood Agarwal, and I'm the CEO of Canvlight. And by way of background, Canvlight has 4 key facets to its business. Number 1 is distribution. We're the largest distribution network in Australia by quite a significant margin. Roughly 40% of all medically prescribed cannabis that enters the Australian public market goes through our network. In addition to that, we perform the vast majority of clinical trials happening in Australia through a collaboration with a local university. 12 clinical trials in progress at the moment, most of them funded by Canadian LPs. The number 3 facet of our business is project delivery solutions. Again, mainly looking after Canadian LPs looking to expand into the Australian market, where we deliver an end-to-end project solution for them. So this is typically either a cultivation facility or an extraction facility where they simply want to replicate their Canadian business in Australia. And then the 4th facet is really consulting and licensing work that we do effectively as a service on behalf of third parties. The vast majority, once again, North American LPs or multi-state operators. So, yep, very excited to be part of this, and thank you very much for allowing me to be here.
Thank you so much. And we have, I believe it's going to be one more unless a few others come on, but Spencer McLean from Hemp Fusion is also on the line. Spencer, are you there?
Hey guys, yeah, sorry about that. My name is Spencer McLean. I'm the VP of Investor Relations at Hemp Fusion, which is a hemp-derived CBD brand here in the United States. I also work for Rad Capital. Rad Capital is, we raise capital for cannabis companies globally. To date, we raised about 700 million, mostly for Canadian licensed producers. Another brand called Plus Products out of California, and now Hemp Fusion. So happy to be here.
Perfect. I think we have all of our panelists that are on the line right now. There will be a few additional people that will join us. At that time, I will bring them in, and when we get the chance, we will introduce them as well. But I think we can move on to our first discussion.
All right, thanks, Jess. All right, looks like I have my work ahead of me today. So just for all the panelists and speakers today, just to kind of give you some context on what's going to happen. So we have a lot of people on the line, as you know, and in order to make this as seamless and smooth as possible, first I'm going to do my best to curate questions. So think of me as I'm just the curator. I'm going to maybe ask a question and point in a certain direction, and hopefully give everyone time to speak on their given specialty. What I would like to say though, this is an interactive discussion. This is a live discussion. If any of you want to send a question to someone else, two ways to do that. One, either just speak up and we'll do our best to include you. The second is you can send Jessica a message and just say, hey, this is something I do have a comment on, and we'll make sure that you get heard. So without further ado, and sorry, and actually before starting, one last thing. For some of the folks on the line that are, specializing in specific markets, if we're not getting there till later in the conversation, feel free, if you want to jump in. If not, you're welcome just to hang out. But I rest assured we will get to you as the conversation evolves that way.
Graham, I'm just going to interrupt quickly, just for all the panelists. If you can raise your hand when you do want to speak, I will be looking to unmute you at that time. Unfortunately, we only can have 3 or 4 people at a time unmuted. So if you look at your screen, there is an area where you can raise your hand, and when you do, I will, or even just physically raise your hand, and I'll make sure to unmute you.
Okay, perfect. Thanks, Jess. So to kick things off, let's talk a bit about North American capital options. Within recent, and I mean this has kind of rippled throughout the entire market, but we're seeing a bit of market volatility happening right now, arguably because of some of the valuations in the early days. So I want to pick on someone I already know well, Jay from Hexo. Do you want to just speak quickly to your thoughts on what's the shift we're going to see in 2020? And I just saw your CEO speak recently on Bloomberg Network, and just and the point he was making was just, important things are going to be venture partners, as well as obviously driving home these revenue projections. What's your thoughts, and how is that going to translate into, capital raising, or in your case, the valuation of Hexo moving forward?
Sure. Yeah, not a problem. Thank you very much. It's really interesting. The marketplace in Canada has gone through this wild roller coaster ride, right? Where we have seen, these crazy valuations go up. We've seen lots of capital being raised. But at the same time, the marketplace has completely matured, right? We've gone from a situation where we were being rewarded based on vision, based on capability, on growth, on future capacity, on partnerships, and now suddenly on a 60-day period, the market is really being valued based on profitability. So for us, exactly like Sebastian was saying on that BNN interview, the focus is all about moving towards profitability. So how quickly can we drive our organization to become profitable? How quickly can we drive all of our business processes to be focused in on making sure that we're operating a strong, truly CPG-like, consumer packaged goods-like organization. So, the access to capital, we continue to leverage the markets. I mean, we've raised to date just over $400 million that we've deployed. That stewardship of deploying that capital is incredibly important to make sure that we're deploying it against things that are going to drive revenue, right? Not just things that are going to drive, future brand, as an example. So that's really what we're spending all of our time on. We've taken the opportunity to go ahead and right-size the organization, to focus in on those key strategies that are going to allow us to be able to drive revenue and drive profitability, and at the same time look to the markets to be able to acknowledge that and continue to utilize the capital markets from a point of view of our standard approaches. We did just recently finish out around $70 million venture that we did that allowed us the ability to be able to drive forward for the coming year. We'll continue to look to access additional capital markets as we need, but it's obviously going to be all.
I mean, and maybe this is, I'll throw it over to the funding guys like Peter Marin from Marin Financing. Do you see the trend now, whether in these equity rounds that we've seen in the past, which has been very common? Do you see the trend moving more towards lending? I know you're biased because you are a lender, but give me your 2 cents on that for 2020.
I also have a 15-year background in public equity, so my bias now is that I spent a long time in the equity world, and I mean, this industry, it's actually kind of late 90s redux of the internet industry, where you had massive explosion of equity financing on ideas and aspirations, and slowly that translates into equity funding based on meeting expectations and delivering profitability. And that drives capital up, things wash out, and then we rebuild. So we may be in the midst of that process right now. From the debt side, we're getting a lot of inbound interest on debt financing, and a lot of that is, companies are, they don't love their valuations, and a lot of it is they're comparing to what they thought they were worth a year or two ago, and where public equities are trading today. So they look to debt to limit the dilution. So yeah, we're getting a lot of interest in debt. If this is just a valuation set, as a lender, it's very exciting. If the fundamentals have deteriorated, and the market isn't meeting expectations, and companies aren't meeting expectations, it becomes a little more difficult to allocate capital. Lenders don't like tend not to like to run into burning buildings. And we've seen a lot of companies hit capital walls, and they may have a couple months left, a quarter or two left, and it's hard to lend into those types of situations. If it's just a valuation, we said companies have strong assets and strong potential cash flow or cash flow, and you're comfortable with that borrower paying the money back, or having the ability to pay the money back, then it could make a ton of sense in an environment where companies are less comfortable with their valuation and want to.
So, Peter, before I just sort of cut you off there, but I mean, and I'll just to stay on to one of your points, when you're creating these valuations from a lending standpoint. I mean, in the past, it would have been a lot to do with future revenue projections and so forth, but I imagine that's not the case anymore. I imagine now you're looking more at assets. What's real? What do they have now?
As a lender, your first priority is return of your capital, and then you focus return on that capital. So when we look at a potential borrower, we'll look at that asset base, are those assets monetizable? You know, what would happen in a distressed situation? Can we get our money back? And then we will look at, you know, what is the return on that capital? What is the rate that we charge? And because of the venture nature that we will take warrants. So we can get equity interest, and you know, we will look to value the companies independently, maybe what a previous equity round was, because our interpretation of what the value of the equity may be different from what their seed or their A round was. And again, it comes down to you know, what really the profitable prospects are for the company going forward, and we try to shy away from multiples of revenue, and I think a traditional method of valuing these companies.
Yeah, and I mean, it's, again, like if anyone wants to jump in or you have something to say, yep. Sorry, I see Ben up there. Yep.
Yeah, I was gonna, you know, it's an interesting time now because we look at PitchBook data, which tracks venture-backed deals and any other deals that are going on. And for 2019, it's already surpassed 1.9 billion to date, whereas 2018 it was around 1.3 billion. Then so as a whole, private venture has increased, but then we dive into it, Q2 actually amassed to 1.1 billion, and then Q3 actually dropped to 400 million. So clearly there's, you know, an issue here at hand where investors are more cautious in the private markets. And, you know, following on James' point and what Peter was saying, the path to profitability is important for us as private investors to understand how an unprofitable growing business could show operating leverage that eventually derives into the gross margins and actually provides free cash flow, which eventually gets to EBITDA. So that's what we're interested in, to understand how that path to profitability looks like. And on the other side, we also want to begin evaluating cannabis companies as individuals rather than as part of a herd. Because, you know, when we evaluate, for example, like a media company, cannabis media company, we're applying media metrics and multiples on it instead of a media cannabis metric. So I think just understanding that we need to evaluate companies individually and what their metrics are in unit economics versus kind of all staggered together as part of a herd. That to me is what we're going to be seeing 2020 as a driving factor.
Yeah, Ben, I have to agree with you 100%. I think that the marketplace, or the days of this cannabis premium on absolutely anything associated to cannabis, is completely gone. We've really got to evaluate these individual opportunities, these individual companies, based on the true merit that they have, right? You know, are they actually acting as a packaged good? Are they acting as a baker? Are they acting as a media company? Are they acting as and if they are, then those are the metrics we need to apply to them. Gone to the 25x, you know,
for sure.
You know, or even worse yet, you know, just this crazy long lob for something in the future. You know, it's all got to be about what's deliverable and what's deliverable in the short term. You know, for us, we're focused in on those opportunities that had a, you know, ideally a 2-year ROI. If it's got a greater than that ROI, then we really have to take a real strong, hard look as to whether it's worthwhile.
Interesting. I mean, you've been in the industry for 6 years. Do you have a controversial issue to that, or stance on that? David from Panther.
Sorry, having a little trouble understanding. Can you repeat the
well, I mean, you know, you've been doing this now for 6 years. You've kind of seen the trajectory. What's your thoughts on just, you know, the current state of whether it's value, the equity raising, the fund or lending, valuations, ROI, like what's your 2 cents?
I mean, everything, I think it was James who was saying, and it is very same as it ever was, kind of, you know, .com era. You're seeing the cycles. You saw the irrational exuberance, valuations through the stratosphere, no fundamentals, and now all of a sudden, you know, you're on Q3 earnings and people are looking at fundamentals. They're looking at profitability. I think those of us on the equity side are still struggling to understand the whole biological assets thing, which is throwing everything out of whack. But you know, what you're seeing is an industry that's starting to be held responsible at a level like, you know, what I like to call mainstream industries in the public markets. In the private markets, capital's scarce. You know, M&A is picking up, and I think you're going to start to see some distressed asset M&A relatively quickly. just because of the amount of capital that's gone into the market and some of the assets that have been created, that are going to wash out. I see more capital coming in the beginning of next year. I think some movement has to be made legislatively, whether it's the Banking Act or the States Act or something, to give it a little bit of a push. None of the cannabis companies that are public right now, really in a real world, would be public. We understand why they are. No offense to those of you that are. So it's a really hard metric to measure against. And until the market kind of settles itself out and starts acting more mature, what you take out of it is you got to take it with a grain of salt. You kind of just got to be on the ground and see what's happening and hear what's happening. And it's a little bit of chaos right now. The debt side stuff, you're getting 12, 15, 18% coupon on public companies with 30% warrant coverage, 40% warrant coverage. Those are, really aggressive deals.
Yeah, interesting. Well, Matt Rosenberg, as you primarily focus on early stage deals, how does that factor into as you're looking at these companies, especially with comments with respect to the M&A market, consolidation market, maybe being a little more desperate than it has been in recent years?
Yeah, I think it's really, thanks for the question. I think it's tough to actually invest, with a view towards an exit like that. Because obviously when you want an exit, it doesn't happen. I recall there was a California-based company, which is great, which was using its neighbors' exits, which were into an extraordinarily hot market, as comps for its own valuation. And I kind of ended up, gently suggesting to them that those conversations happened a long time ago, and the actual exit obviously took a while to materialize. And so I think when you're looking at merger activity, it's a really, really tough way to invest. And companies ultimately need to be able to stand on their own 2 feet. I'm a seed stage investor. And so one of the biggest challenges I have right now is that I can cut a check that's big enough to help a company grow and potentially survive if need be for a number of months, maybe even a bit longer. But right now, given the financing situation, there are folks like Peter, obviously, that can offer solutions to cash flowing companies. But the reality is you need to be able to invest in companies that can exist without a merger or a good exit for a time to come, and are strong enough and lean enough to survive what looks like will be at least another year of pretty lean times. So I would expect a lot more bankruptcies on the public side. I think where life will get really complicated is that bankruptcy law is not very clear for assets in the cannabis space, because at the end of the day, IIPR, right, lent Dianamed a bunch of money to try and get itself right, and that was a good company. And they're not necessarily going to be able to foreclose on the assets there that easily. When you look at state level, it's a really big issue for lenders because licenses can't be transferred that easily. So the bottom line is, I think as an investor, mergers and acquisitions, especially when you're investing in the company you're hoping to be acquired, is a really dangerous proposition, especially right now. And I would say I would generally avoid it as an investment thesis.
Does anyone want to jump in? I was going to actually throw this over then to Patrick, because you just mentioned that you guys did your first CBD hemp investment recently. Is that sort of why? Because what you're seeing right now in cannabis, is this the direction you see 2020 kind of going a little more for Granite Hall, looking at more CBD deals?
So I think the hemp opportunity came to us in sort of a happenstance way, and looked like the other opportunities that we faced. And so it wasn't an intentional direction that we took. It just happened to be a great deal in what we felt was a great deal. And, the hemp space is kind of going through its own rapid emergence, where there's a bunch of new market participants. And like the cannabis market, the market is not, the market infrastructure is not perfectly built yet. So there's an opportunity for us to participate in a way that in a few years, a bank or maybe an agricultural finance firm will participate. With one foot in either market, I can say that, they're maturing at different rates. And just to pick up on the conversation that the group was having before about cannabis valuations, you know, cannabis valuations have been kind of tricky. They feel like they're cratering out now because of what's happening in the public markets. But although we as investors appreciate that the CSE opened itself up to US cannabis companies and there's a few other listings, I don't think we've seen the kind of full maturation of the public market side. So it's almost like looking at a piece of data that is itself not fully formed when you're talking about public market comps on cannabis valuations. So just to kind of summarize, you know, we were skeptical of the euphoria. We're just as skeptical of the trough thing. It's companies that can execute their business plans that are worth something. And on the hemp side of things, it's a totally different set of because you have larger, more fully capitalized companies, Fortune 500 companies. Everybody's kind of sniffing around, and things seem to be moving there. So anyway, both markets, I think, and different and interesting investment challenges.
That's interesting. I do want to introduce, I think we have Patrick Morton and I believe Justin Cooper online. I will come and let you guys introduce yourselves. But just to that point, so we were just in Colombia actually on Saturday there. We had a lot of, I would say like 3 of the top 5 licensed producers in the country at the conference. And, you know, even though we were talking cannabis and we started talking competitive advantage of Colombia, one of the points that actually kind of came up was that, you know, the cannabis, no one had really made money yet, but in the CBD hemp space, like they were already shipping product and making real revenue. I thought that was kind of interesting where, you know, even though the story they were telling was this future of Colombian cannabis, the reality today is they're actually actualizing revenue in CBD hemp. And so I just thought that was kind of interesting that, you know, why isn't that the story being told that, you know, let's own the CBD hemp space today and then work towards cannabis cultivation and being a significant partner or a significant player in that. But anyway, so just to move on from that, Patrick Morton, you've joined us. Do you want to quickly introduce yourself? All right, no, sorry, Patrick, you're already here. My bad. We have Justin Cooper. Justin, are you on the line? Did Justin join us?
Yes, he did, but I'm not 100% sure what's going on. Let me, we're going to try to figure it out technically again, but I'll let you know again if possible.
All right, no worries. So we'll then now let's kind of, you know, take that kind of topic, just the cannabis versus CBD, and let's kind of move a bit into the international market. So, you know, I want to throw this over to Melissa. How are you, Melissa?
Hi, Graham. Yeah, well, thanks.
It's been a while.
Yep.
So UK, obviously one of the, you know, just a crazy market right now for CBD, and it's really even, you know, and I'll be completely transparent, like it's even hard for me to figure out what exactly is happening. I know you are looking more at the cannabis space, but how are you sort of, you know, weighing that and especially either in your investment opportunities or your venture opportunities? Like, you know, do you see cannabis being the future of the UK, or do you see the CBD market playing a bigger role?
Well, I think like most of the guys on the call here, you know, we started off thinking that cannabis and medical cannabis was going to be the big one for us. And we basically followed what was happening in the capital markets in Canada and Australia and had a good go. And markets aren't here as we expected them to be, pretty much, we all believe, because of the Proceeds of Crime Act. So we think from an access to capital perspective in the UK, we need to see some clarity around proceeds of crime, and then we think markets will open more, certainly in the quoted space. And I can talk a bit more about the various exchanges, as I'm sure Patrick can as well. Patrick Morton, I see, is online. In the CBD space, yeah, absolutely. We're all having a bit of a scramble around what novel foods might mean for the CBD industry over here. So we're seeing certainly incredible growth and lots of new companies starting up and working in the CBD space and seeing early revenues, as I think someone else just mentioned. Oh, you talked about in Colombia. And again, I think the issue is still a little bit access to capital in the private realm. Yes, people and high net worths are happy to back ideas and businesses, but certainly institutional money and And quoted money, I think it's still reticent to come into that into the space until we get some clarity around exactly how novel foods is going to work in this country. And I think we're weeks away from getting some kind of idea about what is going to happen with novel foods and the FDA in the UK.
I mean, so Spencer, Hemp Fusion, I mean, I know you guys are based in the US. We've spoken before. You are looking at the global CBD market. Like, what's your thoughts on this?
Absolutely. We're pretty close to expanding to the UK. We're speaking with some distribution partners over there, as we speak. We're also looking to Mexico. There's a nice distribution network down there. So I know our sales team is looking at that. I mean, it's a global opportunity. In the United States, just going back to cannabis and versus CBD and hemp-derived CBD, we looked at the opportunity. We've invested in licensed producers in Canada. Seeing the national opportunity down here in the US is really what got us excited, and that's why we backed Hemp Fusion. So, we're really excited to expand internationally, but we're not there just yet.
Chris, Forefront, just on that comment, like I know you guys are heavily focused on Washington State, but you did mention that you have investments going into Colombia. Are you thinking cannabis, or are you thinking, CBD, hemp? Like, what was the play there? What was the, sorry.
Yeah, no. I mean, to be perfectly honest, it was kind of a play of opportunity. We have a very close personal contact down there who's very well respected in the business world, and was plugged in the really early days to what was going on in Colombia. And so we saw it as an opportunity to get a license relatively cheap in a country that we see a lot of long-term benefit for. As I mentioned, we're not operational there. We've literally put very little time or effort into developing that license yet. And part of the reason is we do see Colombia as a really good long-term play, particularly on the cannabis side. I think you're absolutely right that most of the companies there have derived most of their revenue today from CBD hemp production. And I think the reason for that is I think most folks who got active in Colombia jumped in thinking that this is going to be a great low-cost producer country for cannabis. And I think in the long term, that's exactly right. The issue is right now, there's no markets to sell that into. You basically have to, if you're producing cannabis, your options are generally to sell into a medical market, which by and large has to be GMP produced. It's virtually impossible to have GMP certified products in Colombia for the European market. I think there is a market for that product in Latin America, but I think companies have found it much, much more difficult than they expected to get GMP certification on that product coming out of Colombia to get into Europe. And so they've pivoted to the market that actually exists, which right now is CBD. I think for us, part of the reason we're not jumping into that is I'm actually skeptical of the sort of medium-term prospects for hemp-derived CBD coming out of Colombia. I think there is a good chance that it may work, but I'm quite nervous about what's happening in China with hemp CBD production. The Chinese government is really starting to back very, very large-scale CBD production out of China. I think that's going to have a massive downward price compression effect on the CBD market, and it's going to make it a little bit more difficult even in some of these low-cost producer countries. But in the long run, when we start looking at the ability to export cannabis, particularly cannabis feedstock, so the product that will go into extraction, I think Colombia is extremely well positioned, and I think having a good head start will work out both for the country and for some of these companies that are diving in. I just think it's going to be a bit of a longer slog, and they've got to have got to be ready for a bit of a longer runway before that becomes a particularly viable market.
Interesting. I mean, Josh, Zuber, you were just in there. You were with me in Colombia. We just had a beer together, I guess, less than 24 hours ago. What was your takeaway from what you heard at the conference? Oh, sorry, Josh, you're muted.
Sorry, I thought I had unmuted. Sorry, I apologize. I appear to have chosen the wrong place to do this from, since they may have just finished cleaning the windows behind me. with large blasts of water. So I caught most of what was said, but not all. I thought that the Columbia conference was fascinating from a point of view of, I mean, the panel that I did was primarily on regulatory issues and you know, the process of doing trials, et cetera. But it's clear that, you know, the entire industry worldwide is really looking to the breakdown of regulatory borders and bans to be able to become a worldwide industry. That's going to be, I think, an ongoing process over probably the next decade at least, and there will always be some countries that are barred to it. I also thought that it was interesting looking at what the sources of capital were and who the people were who were getting involved from the company side when you think about this as a country that has a long history of production, but more on a small scale level. And I think that getting those previous small scale producers involved in the large scale will have incredible benefits both for the industry and for communities within that country.
Interesting. Patrick, Supreme, and sorry, I'm trying to get around to everyone, so I am, you know, bear with me. And again, if anyone wants to add to the conversation, please, you know, jump in. You know, I'm just here, I'm just directing. But if there's something that was said and you're like, actually, you know, I believe this, or I think this, or this needs to be mentioned about that comment, by all means, you know, you're more than welcome to contribute. So just to throw it over to Patrick, I mean, you're predominantly focused on Europe, you know, just to bring it back to Europe. Is this, again, is it right now cannabis Europe, which is exciting, or is it CBD Europe, which is exciting?
Well, our mandate is CBD in the UK primarily. This is allegedly a 300 million pound market as we speak. So, you know, 500 million Canadian. I mean, it's equivalent to 1/3 the size of the entire Canadian market. On paper, it's already a fairly substantial industry for CBD products. And obviously THC, we're so hampered, you know, the medical regime here, which was legalized a year ago, hasn't resulted in really any actual medical product being sold here. There's only about 20 prescriptions for medical cannabis in the UK. So on that side, we're like 20 years behind North America, which is quite disappointing. My personal view is that the real end game has to be adult use THC legalization European wide. Otherwise, the opportunity isn't all that exciting in the medium term. And I view CBD as the way to crack the door open in the UK and in other markets to get regulators comfortable with the safety of the product and to kind of have a test case for a regulatory regime that can then be converted to an adult use THC market. And we're in the fits and starts of getting that regime in place in the UK, as Melissa has already pointed out, with novel foods being one of the major questions, and then the other one being proceeds of crime. At the moment, it's super fragmented here. Several hundred producers, each, you know, with 1 million or less of sales. So there's a lack of professionalism and product quality. And in a way, that's a big opportunity for investors or teams to come in and professionalize the industry. But on the other hand, there's these regulatory risks in the near term that kind of gives everybody pause before cutting the big investment checks. And then on the investment side, various sources suggest there's only been about 400 to 500 million euros of investment from private or institutional investors in Europe and the UK in the last couple of years in this sector. So, I mean, it's a tiny fraction of the activity that's happening in North America. And I kind of view legalization is so important to unlock that capital. There's these deep pools of capital available here and in continental Europe. You know, my Christmas wish list would be maybe 2020, probably not this year, but some form of US federal legalization. And then the big UK-based institutional investors here start to get way more comfortable with deploying money. And then we're off to the races. But in the meantime, we're sort of small fish, small pond.
Interesting. Does anyone have anything to add to that? No? Okay, well then I'll keep going across the, well, I guess the pond, I don't know. But over to Australia. Sud from Campbellate. I mean, you guys have a pretty good distribution network in Australia. You know, you mentioned you are probably the major player, if not one of the major players. What is that? So I imagine there's some play here to get into Europe to make sure your product is part of that, you know, burgeoning medicinal market happening in Europe. Does that also mean that you're looking at Europe for capital as well? Like, I think you mentioned, and correct me if I'm wrong, a lot of your capital to date's been Canadian or North American, but, you know, do you see Europe being, you know, a potential?
Look, a very good question. There's probably two parts to that question. I think many people would be interested to hear what's happened in Australia in the capital markets for the cannabis industry in general. And we're basically a mini Canada. I've always maintained that Australia's population is about 25 million. And when we add New Zealand, which is about 5 million, then as a combination, as a region, we're about 30 million. So we're not a huge degree smaller than Canada. And the cannabis explosion happened in Australia in a very similar manner to Canada, but just several years afterwards. So it's kind of been a staggered response. But very interestingly, almost all the trends that happened in Canada happened at a later date, but almost in the same sequence in Australia. And I've described this in a previous conference at the World Cannabis Congress as being a cannabis playbook. And if we actually sequence the same events that happened in Canada, the exuberation, the overinvestment, overcapitalization, people valuing companies based on acquisition of licenses or LOIs or capital market stories, and then very little consideration for revenue and profitability. No one was looking at when do we get our return of capital, when do we get ROI. No one was looking at investment with a view to an exit. What were the tangible markers of underlying value? What are the transferable assets in the case of distressed assets or failure of business plans? Those things were never considered. And all of a sudden, almost within a 3-month period in Canada, everyone started considering all those factors. If we then sort of fast forward that, the explosion and the over-exuberation happened in Australia really January 2018. We had a combined valuation of the 15 listed cannabis stocks on the Australian Stock Exchange well in excess of $1.5 billion. And bearing in mind we're a country of 25 million people, $1.5 billion is a phenomenal amount of valuation. Almost all of them were pre-revenue, so that was based on zero revenue. And then now we've actually had quite the opposite. We've had a significant compression of valuations. And many of you might have noticed the largest or the first cannabis company called the Can Group, which was it was underpinned by Aurora. I used to work there as the medical director in the early days when they first started. They actually have had significant compression of valuation, and they've gone from a valuation in excess of $500 million from January 2018 to today. They're worth about 60 million. So, you know, very, very significant compression.
Wow.
And that's not too dissimilar to many of the, the top 10 companies in Canada. Interestingly, the market has punished those who are mostly at the upstream level of the value chain. Most people recognize, people think of Australia as a very large, expansive country with lots of cheap land available. It's probably quite the opposite. We're probably one of the most over-regulated, most developed countries in the world, where land is extremely expensive, labor costs are extremely expensive, and electricity and water costs. I mean, we are a desert. Water costs are extremely high. So plant-touching businesses are almost, this may offend some people in the room, are almost doomed in Australia. It's probably not the perfect location to do plant-touching businesses. Having said that, many things that are midstream or downstream, one can make the argument that it's probably the perfect place to be operating those kind of businesses. We have a very sophisticated university and medical school setup. Often universities are co-located with large hospital establishments. We've got a system where you can get medical research underway without getting federal government approvals or exemptions. There's more clinical trials happening funded by top 10 LPs in Canada, in Australia, than in their own country in Canada. There's more MSOs in the US paying for clinical trials in Australia than in the United States because you don't need DEA exemption permits every time you want to do research. Similarly with extraction and quality, Australia it's been practicing high level for a long time. And so the idea of high quality pharmaceutical manufacturing is almost ingrained in the industry here. And it's very easy to access QA and quality professionals who operate with that mindset. So I think people were saying that, you know, trying to produce GMP products in Colombia or GMP products in Canada has been a challenge. And I understand that many of the Canadian workers really struggled to turn their existing cultivation and manufacturing processes into EU GMP, or even many of them have struggled to get GPP to a certifiable quality. That's not the case in Australia. It's part of the training and mindset from day one. Almost all the manufacturing businesses that have set up here have been GMP in mind from day dot. Similarly, the Canadians that have been transferring or replicating their businesses in Australia have done exactly that. It was, let's go for EU GMP quality from day one. And that's general, and accessing the capital of staff and government support and funding has never really been a problem. The last part, the real downstream part, and this is probably where Australia may actually be one of the best places in the world, is that there's more free trade agreements with Australia and the surrounding Asia Pacific countries than anywhere else in the world. So if you were looking for a destination where you can capture 70% of the world's population, China, India, Indonesia, Malaysia, all the Southeast high populous countries, there's a very solid argument that you would have your downstream operations in Australia, because that's where your zero tariff access to the rest of the world is. So there has been this sort of transfer of IP and capital from Canada, as there's been a bit of deflation in values there, definitely to the Antipodes in Australia. What we've noticed of recent time, though, is there's been a significant punishing, though, of those upstream businesses.
I mean, I feel like this is a natural segue into Adam with Metagrowth. You know, I know you said you're earlier stage, but do you see this as you're going into your capital? I assume there's capital considerations being done. You know,
Sure.
are you, yeah, is this something where you're pitching, whether to, you know, capital in North America, Europe, or so forth? You know, it's all about the competitive advantage of where you are and your access not only to the Asian markets, but as well as EU GMP, and obviously a ecosystem of, you know, leading research in the cannabis field.
Yeah, absolutely. And I think certainly that, I mean, that there's a host of implications there in terms of that vertical integration. And I don't disagree with Sud there in terms of the cultivation here in Australia. I think there will be a key component of players that will have success in large scale cultivation, but I think there'll be a number that won't compete. And, you know, our model is very much based on meeting that downstream extraction and manufacturing, and really playing into that European GMP model. So I think a combination of our model and coming back to the research and the R&D as well. And again, Australia's reputation for that absolutely is world class. We have a relationship with Deakin University and a co-located research facility with the university there as well. And I think that brings a whole host of opportunities, which takes us away, you know, as an independent company in early stages from, I guess, trying to compete in a global scale, very much focused on away from the cultivation, and obviously hopefully moving into some relationships with cultivation partners that are going to have some success in competing in those markets, whether they're Australian based or globally based, and that probably remains to be seen as to exactly where they come from. But and in terms of the capital, you know, I think there's certainly still much interest in Australia, and as again Sud said there, I think coming out of North America, we're seeing a lot of interest just in terms of a diversion of capital from markets that have matured there to a degree. We're now seeing a lot of interest in the medical market here in Australia and in the emerging market in New Zealand, particularly, I think we're seeing a lot of interest in as well for some of the CBD opportunities that have been discussed, and obviously the medical market to a lesser degree. And I think obviously the 2020 referendum for potential adult use there is an opportunity that everyone sort of is carefully watching the space there as well. So I think on the capital, there's a combination of certainly international interest, a lot of high net worth individual interest, I believe, we're seeing for the opportunity here in Australia and New Zealand, and looking beyond, notwithstanding what's happening in mostly your part of the world, from the panelists there in North America, with a compression of those capital values. But I think that was, as we all probably saw to a degree, that was inevitable. And now all of us really have to just make a business case for our own opportunities. And I think if, again, as has been discussed, if we can really position ourselves with a well-executed plan, then there's no reason to say, for example, in our perspective, that we can't make a very solid long-term business case for an EU GMP facility, in a market that I believe, genuinely in 10 years will be well and truly supportive of some key players here in Australia and New Zealand.
And sorry, and I do want to get Ronnie Jagerman involved. I mean, we talked with and to Sid's point, Australia being kind of like a leader on the research side of things. I mean, everywhere we go, everyone refers to Israel as the leader in research. You have a unique perspective because you come from the institutional side of things. You're an investment banker. And you're also leading these rounds. So you're telling this story to these, I imagine, international capital. Like, what is that story being told? Is it the research? Is it the cultivation? Is it the access to markets?
Can you hear me?
Yep, we can hear you.
Okay. Israel is in a unique position because CBD and THC were first researched by Professor Meshulam in the Hebrew University of Jerusalem back in the 80s and 90s of the last century. And the government in Israel has approved the cultivation of medical cannabis, I think it was 2006. So we've had 8 LPs who were cultivating cannabis for a number of years, and patients who have received medical cannabis, and a few medical institutions and universities who have gone into R&D and have already results with medical cannabis. So that's really the base of what is happening in Israel. We currently have about 60,000 license holders for medical cannabis, which is, just so you understand, Israel has a population of just over 9 million, and Germany has a population of 87 million, and we have the same number of medical cannabis license holders. So that's how medical cannabis in Israel is big. In 2017, the government has issued the right to have additional licenses to grow and cultivate cannabis in Israel. I think over 240 licenses were soft issued. And of them now, after 2 years, maybe between 6 to 10 are at the stage where they're actually cultivating cannabis or starting to cultivate cannabis. Probably the best one right now, the heavily invested one, is probably the Cronus facility in Kibbutz Gan Shmuel, which is about 50 kilometers north of Tel Aviv. Cronus has come here and has invested a lot of money. I know the facility myself. I've seen it. A company that I'm a director of, which is called Waterways Technologies, has provided part of the technology to cultivate and to irrigate the cannabis. So it's a very impressive facility. Saying that, we had a lot of hope in 2017, and unfortunately, government bureaucracy has brought us to a place where the industry could have grown tremendously in the last 2 years, but up to now, it's not 100% clear if medical cannabis may be exported out of Israel or not, and what would be the terms. So the government has declared a lot of times that it's going to happen, but it hasn't happened up to now. And regulation or new regulation has caused actually a shortage of cannabis in the local market. So the government is thinking of importing cannabis into Israel. So that's currently the state of the industry or the cultivation. Again, saying that because of the widespread of where we are, you have probably 40 to 50 companies which are now developing a lot of technology around cannabis. This could be starting from assistance to cultivation through injectable CBD. So there's a lot of interesting things going on here. And, you know, if the government, well, we don't have a government now for a year, but, you know, if the government really gets its act together, you see a lot of technology coming out of Israel.
And I was muted. Okay. And I'm sure there's a lot more than we can talk about in a few minutes. So we have about a half hour left, and the way I was hoping we could do this is we have a couple questions from the audience, a couple panelists have asked some questions. I'm just going to start running through the questions, and if someone wants to jump in, feel free. So the first one comes from Klaus Van Oos with Transgas. Sorry, hopefully I'm saying that right. As we are established, so this is on behalf of Transgas, as we are establishing circular agri projects. So, okay, there we go. Can we hemp, cannabis, fruits and veg, and potentially flowers in West Virginia and New York State, synergize with power plants and data centers? We would like to understand if our plan fits the vision of the investing network that the participants have, and if this is something they would be looking at. So I think that one's to the funds, and just so basically, this group is establishing circular agri projects around hemp, cannabis, fruits and veg, as well as flowers in West Virginia and New York State that's synergized with power plants and data centers. Is this interesting right now? Is that something even that, you know, any of the funds here would be interested in? Yep, Patrick, you go.
Well, I have to say, it's definitely the first time I've ever heard it.
Yeah.
Lots and lots of proposals. That is the first. And so since it's the first and it's novel, sure, I'm interested. Love to hear about it.
Anyone else on that? All right, fair enough. So actually the next one, and this, and actually, so Sud wanted to just talk a little bit, a bit about the cannabis IPOs in Australia, you know, and more or less on the enthusiasm and the oversubscription. Sud, do you want to kind of just take over a little bit on that?
Yeah, sure. I've just realized that what I said before may have sounded very negative about the Australian equity capital markets, when it's actually probably quite the opposite. The enthusiasm and the availability of funding here is still very high. And probably the best example I can give you is Kronos Australia, that listed a fortnight ago now, and they listed at a post-money valuation of 64 million. So they raised 20 million, post-money at 64. And that was essentially, you know, that was entirely pre-revenue and before they even had boots on the ground. So essentially on a business plan, listed at a tremendously high valuation and filled the books within a few days. So heavily oversubscribed, you know, mostly on the fact that they've got a major partner in Canada, but certainly with, I guess, new people to the industry and with zero revenue, that's an unusual valuation to get. But there's still an argument to say there's a lot of enthusiasm there. Similarly, there's been another 3 companies which have either listed or done some pre-IPO raising. Probably most notably in the hemp space, we've now got 3 large hemp companies in Australia listed on the Australian Stock Exchange. 2 of them are still at the very small stage. Australian Primary Hemp, which is essentially a non-grower but outsources growing capacity to contract farmers, and then does a bit of dehulling and milling and producing finished food goods. They've got a tremendously high valuation for the size of the business as well. And there's another one called ECS Botanics, very, very similar kind of business plan, but again, tremendously high valuation. And then obviously most of you will be familiar with Ecofiber and Elixinol, which are, Ecofiber is no longer Australian listed, listed elsewhere, but certainly Australian headquartered companies. So very interesting. And there's another 3 cannabis IPOs already lined up for the first half of next year, which appear to all be tracking along very well as well. So certainly local institutions in Australia and international companies, international funds out of Canada looking to diversify, I guess, into what's seen as a more emerging market. There doesn't seem to be any shortage of that at the moment. I'm not sure if that's an experience that's shared by the institutional leaders that are on the panel today. Are they still looking to diversify out of Canada and into emerging markets?
Any comments on that? Must be a Monday. Very.
Well,
okay.
this is Matt. So I guess one quick question that comes up is, Presto Pharma was supposed to be acquired by Pharmaciello. That's traded on the Australian Exchange, I believe. And that deal has been obviously slowed due to a fair value opinion. And I'm wondering, like, you know, does that have a ripple effect for the rest of the Canadian and the Australian companies? Because when you have a deal like that fail to go through, then obviously everyone else looks at those companies as no longer being potentially interesting acquisition candidates. And obviously, with Australia having so many ties to the big LPs, it's a question of where do the Australian plays ultimately go, the smaller ones in particular. If they're not going to be acquired by other entities on US or Canadian exchanges, and they're not doing business with Canadian LPs, then who the heck do they do business with in the long term?
It's very interesting you say that, Matt. I think what's happened in Australia probably over the last 12 months is perhaps the type of people who explored cannabis industries in this early stage of the industry were people from non-business or non-healthcare backgrounds. So they were essentially mostly other people, I'm quoting somebody else, bankers, brokers, and stoners. And they had a very non-conventional business background. And some of the businesses had very powerful stories behind them and great visions behind them, but the execution hasn't necessarily followed through. And one of the concerns has been that many businesses adopted very much a property development style business. They were purchasing land, they were trying to get investors or capital stack finance to try and build a project, manage all the earliest parts of the project, and deliver a finished project with a view to making future revenue based on the output. And those kind of project management skills and property development skills are a skill that is learned in other industries and doesn't necessarily transfer to the cannabis industry immediately from the nature of the backgrounds of the people that entered the cannabis growing world. And it seems to be that it's more the caliber of the and the quality of the advisory that's been has sort of led to the downfall of the majority of the cultivators. It perhaps been treated in the same seriousness as if you were building a skyscraper or building an industrial facility. I guess the thought that goes into building those and the diligence that goes into building those would have been much higher and perhaps could have been applied to the cannabis industry. And this may be a similar thing to what happened in Canada. People may have been building facilities for cultivation, extraction, or whatever, that didn't have the same meticulous diligence that would have gone into it if they were building a shopping center or something that was another commercial property asset. And so most of the cultivators have reached the point now where they are struggling, and very few of them have, well, in fact, I think none of them have actually managed to pull out a crop that has led to being given to a patient, which is quite damning for the Australian cultivation industry in general. And part of the reason for that appears to be the overregulation of the quality processes that have been placed on them by the government, but also because we're related to the game than the Canadians. The Canadians already have a very well-established pathway for retail here. Probably today, 98% plus of all cannabis products in Australia are Canadian sourced. So it would be very hard for an Australian domestic market to thrive with the background of lower cost and high quality Canadian products being readily available. That's kind of been one of the major issues. But having said that, the enthusiasm for investment, the public equity markets are still very forgiving, and until probably, well, of the most recent IPOs, almost all the books have been filled very, very quickly. So hopefully that continues into the next few years. We shall find out.
And if I can just jump in there too, I think it's just raised a point in my mind there too, that term that we heard so much in, maybe scaling back to 2018 in Canada, that race to the starting line that everyone was talking about. And, in Australia here, I mean, there's been a degree of that as well. I mean, everyone's obviously trying to position themselves in a relatively early stage industry, but very much to your point there, so any other traditional industry and business metric on the scale of operations that we're trying to create, whether it be cultivation or extraction or whatever, doesn't just happen in the space of a few months. If you've got a long-term business plan, and a number of drivers that you're positioning for, these are all things that take a considerable amount of time. And I know from our perspective, on the one hand, you've got the capital markets and the funding, as a key element to positioning your story. But equally, I mean, really, you've got to position yourself as a executable business plan and put all those fundamentals in place. And, we made the decision early, possibly to our detriment, not to have sort of accessed, much more readily available capital, perhaps from Canada or North America a couple of years ago, but to have some fundamentals in place before, and really, position ourselves, in our opinion, to be a leading Australian company in 5 years down the track, rather than just rushing to a position with no fundamentals. So I think, for a handful of companies in Australia, listed or otherwise, that's the challenge. And some of those listed companies obviously are obviously much more exposed in terms of their disclosure, in terms of what's happening. So that's just my 2 cents on that as well.
Yeah, if I could just interject, I think you're absolutely right. We're in a situation where everyone believes that you can just step into this business and make a huge amount of money, great profits, etc. It's a fundamentals business, right? It's not
absolutely.
This is agriculture that requires huge capital investment. It's not that I'm just going out and planting an open field and I need to have some harvesting equipment. Depending on what you're trying to create from a point of view of the quality of your product, you have to stand up huge infrastructure to be able to maintain the right growing quality, the right consistency of product that's going to allow you to be able to win those, whether it's medical patients or recreational customers, or use that as an ingredient for a further advanced product, right? There's lots of things that need to be done. When you look at us, we've grown or created an organization that started off with 7,000 square feet worth of greenhouse. We're now over 1.8 million square feet of cultivation, and another, just shy of 2 million square feet of processing. Those are big investments to be able to get there, to be able to bring products to market. And especially when we're now looking to be able to employ those products into advanced products that require you to not only given our current regulatory environment in Canada, not only create the cannabinoids, but also stay within a licensed environment to infuse those cannabinoids into another product. So as an example, we have a relationship with Molson Coors to be able to bring beverages to market. We need to stand up a bottling line to be able to do that. We need to be able to stand up, full facilities to be able to create these packaged goods for consumers, and then the whole distribution chain to bring those out. So it does take a lot of investment in order to get there, a lot of capital investment, but also fantastic operating prowess, right? That ability to be able to have the right operations that can create these products and bring them all the way from an initial ingredient, if you will, all the way through to a finished good. And then, of course, the branding, distribution, and everything else goes with it. It's not easy. This isn't a simple win-win type of a phenomenon. It's a hard-fought business.
James, I want to jump in. I agree completely. I think we've seen a sort of a massive shift towards execution and obviously revenue now is the primary metric that investors are looking at. And that has changed dramatically over the past few years. I mean, funded capacity a few years ago was the buzz term. Then we shifted to, well, what are your new and novel products? And now it's, the first question all of us are asked when we're raising capital is, what are your revenues today? What are they going to be next year? So it is execution. That's going to separate the companies from sort of the winners and the losers. And I think, now is a sort of a critical time for a lot of these companies to prove themselves or I don't like where they're positioned.
Yeah, agreed. The next 18 months is going to be critical for the industry.
Yeah.
Okay. Anything else that anyone wants to contribute to that? If not, we do have a question. So this comes in from Ken Coles, and I don't know if it's a question or a statement, but it'd be good to get everyone's perspective on this. This is, so China's CBD genetics aren't high in CBD yet, but concerning their large scale production prices will drop as soon as their genetics are able to produce higher CBD values. So I guess like the comment being is, and maybe this is a question now coming from me is, are we looking at China? Are we talking about China? Are you talking about China? Or looking at China? Does anyone have anything on China?
I'm happy to jump in. I mean, we haven't looked we're sourcing our organic, food grade hemp out of Eastern Europe right now. We've looked at many different US producers. We haven't looked at China yet. It's certainly on our radar. But, we purposely are not vertically integrated in our company. We want to be focusing on, distribution, the final product. The one comment I might have on, and I'm not an expert in this field by any means, but as far as the CBD percentage, sometimes if it's lower and you've got higher terpene profile and different constituents, you can still have, a desired effect. So it's not always the CBD percentage. A lot of companies will spike CBD, whether it's isolate or, distillate. We're using a full spectrum product. So, whether or not our CBD is the highest percentage, we feel confident in the other terpenes and other constituents that are present in our product. So, that's something to consider.
I mean, I don't have any particular cannabis-related experience with China. I've got to say, though, that taking a step back and looking at the macro situation, the likelihood is that this is going to be a market that's going to see, for instance, legalized THC seems slim to me. We're talking about frankly, what we've seen over the past several months, a pretty highly repressive regime that doesn't tend to match well with making products available or making drugs available that will allow that cause people to question reality, for want of a better word. I don't see it happening in the near future, other than perhaps as an export market. But I don't think of China as being a major agricultural source in the way that, for instance, Colombia would be, or other areas that are historically strong growth opportunities for cannabis.
Just a quick note to add on China. So we did a deep dive into hemp across the world, and we found that China is the largest textile industry in the world. And to date, they've had 400,000 acres of hemp plant farmed already. So it's no doubt that, the hemp actually will go to so many different use cases. And we've seen China textiles, automotive, and now cosmetics. So we personally are bullish on what we could see hemp being used for. And we definitely think China will emerge as one of the leaders for cannabis hemp as well.
Matthew, I know you mentioned you have a perspective on China as well. Do you want to jump in on that?
Yeah, sure. So I actually advise, I do business in China, and I advise folks that are invested in the CBD space there. So there were four export licenses issued. I'm sure this is like everyone is aware. Obviously, no domestic consumption to date, all export driven. Yunnan province is obviously where almost all of the hemp is produced. As has been mentioned, extraordinarily low
percentage CBD, but obviously the bulk there's so much production that in bulk it's quite easy to achieve. One of the foci has been obviously bringing in technology from the US and Canada, particularly on the extraction side. To date, I mean, there's been there hasn't, not tremendous tie-ups, but I know as regards the US, the trade war has really killed any opportunities to put together deals there. From my perspective, I think the biggest challenge is the US obviously doesn't have federal regulation around THC, but even CBD, it's not clear to me how willing there will be, what the willingness will be to allow importation. And Canada, while very focused on the export, also seems to be a bit protectionist. So I guess from my perspective, China may offer amazing price points, but the market, even CBD, which is obviously descheduled in the US, still has a lot of protectionist elements. So I would be curious for everyone's perspective on the price points may be better for China export, but that doesn't necessarily mean that it's going to meet the market demand. We may have an artificially high price in places like Canada for a while to come.
And I think if I was just going to say too, I mean, it's just thinking generally on China. I'm thinking from an Australian and a New Zealand perspective. I often cite that Brand Australia leverage and New Zealand for our products and agricultural produce. And I was just reading an article. I quote the powdered milk formula very regularly here in Australia. I mean, we've still got people here in Australia buying powdered milk and sending it to China. And there's limitations on the amount of powdered milk that customers can buy, at a time out of Coles and Woolworths. I mean, there are certain products that people recognise the quality from, and certain jurisdictions that people recognise the quality from. And I think for a time, anyway, we will have an advantage here in certain parts of the world, anyway, where that quality stamp is globally recognised.
Interesting. Anyone else like to jump in? I do have one more CBD question. So this is also, I think Ken Coles was just clarifying his question. So his question is, are there certified CBD seeds and genetics in the US and Canada like there are in the EU? So in the EU, they have a strain catalog, I guess below 0.2%, but there's no special CBD cultivator as certified seeds are available. And he's talking about industrial hemp, not CBD cultivators yet, for example, like in Germany. So maybe Spencer, with your experience in the US and Canada, are there certified CBD seed genetics that you're working with?
We're sourcing out of Europe right now, and we do get a 0.2%. I don't have much more of an answer for you on that. I apologize on the catalog side. I'm more focused on the finance side of our business.
Mm-hmm. Anyone else have thoughts on that? I know not everyone here is in CBD hemp, but maybe, I don't know if anyone has been dealing with this.
There are certified CBD cultivars for sure, both in Canada and the US. And in the US, it's more on a state-by-state basis than nationwide. To be able to achieve the sort of levels that you're talking about, yes, absolutely. The drive, I think, for everyone is not just about achieving that low level of THC, but also achieving that as high as possible level of CBD. In Canada, you typically see that in and around the 3% range, but you will see some cultivars that are allowing upwards of that 10% range. Whereas when you're in the US, in particular states, you may see it get as high as 18%.
Perfect. Okay, so I want to shift focus a bit because we do have a lot of IR guys on the call, investor relations. Let's just talk about capital strategies outside North America. And so maybe, and in that respect, what are some available hubs? What are, should people be thinking about London, Frankfurt, et cetera, as part of their going public strategy, raising capital strategy? And maybe actually, and I'll start with Melissa. Do you want to comment on some of the various exchanges in London and where you see?
Yeah, thanks, Graham. And it's interesting listening to the North American, Canadian, Australian experience, because we are, in some respects, behind behind everyone else in terms of where this industry is at. But in some respects, I think that's a big opportunity. So we've had the opportunity here to sit back and have a look at how things have unfolded in other jurisdictions and hopefully learn from that. And we're certainly not seeing the big valuations. So we haven't experienced the crash that everyone's experienced in the rest of the world. And I think if anyone's got an appetite for a little bit of risk, it is going to come here. When we listed our tiny little shell, and it's a publicly listed company, but it's owned by us in the majority, because we just wanted to get a footprint in the space to see how things unfolded. But interestingly, when we started this in mid-2017, we all thought in the industry we'd be probably 3 years away from any legalization on the medical side, and it happened within 3 or 4 months. And we're now starting to see some more pressure from patients and patient advocates for the increased legalization in the medical cannabis space. So I think if anyone's got any appetite for trying to be a first mover, things are going to move here fairly quickly from here. And interesting, in the CBD space, I think Patrick and I both share the view that at the moment it's pretty fractured, but things will change. And what we don't have is the highly regulated environment that Canada, for example, has. So at the moment, you can put a pretty broad brush across your activities, and you won't get stopped by any of the regulatory authorities. You might be asked to change what you're doing, but no one's going to shut you down. So we're not seeing that very aggressive behavior that we're seeing in some other jurisdictions. And just talking on the particular opportunities in capital markets here, I don't want to tell anyone how to suck eggs, but essentially we've got the next exchange, which is sort of the light exchange, probably the equivalent of the CSE. We've then got the AIM market, and we've got the standard list, the London Stock Exchange standard list. So the most cannabis companies at the moment have started off on Next, because, as I say, it's sort of jurisdiction light, as it were, but it gives you access to some capital and it gives you a footprint in the quoted space. The exchange that everyone sort of would like to be on is AIM, but at the moment the AIM regulatory environment is still very tough when it comes to cannabis. And there's probably a few people here who will get the joke that the AIM regulators don't want any mining entrepreneurs to be the first backers of the first cannabis company that's listed on AIM. So I think Canaccord over here are looking to do a little bit in this space, and we might see something move to AIM maybe the next 6 to 12 months. We're seeing a few companies try to get on the standard list, but again, that involves a huge amount of paperwork with the UKLA, which is the UK listing authority. So it's a very highly, there's a lot of process, put it that way. So there's a long iterative process with the authorities to get documentation approved to list on that exchange. But if you can get on that exchange, the institutional investors and funds are open-minded about investing there. So I think that's where we might see the most amount of traction in the short term. And I'm just going to go back to Adam's point about the Australian sort of tag. We're actually finding that here in the UK to a certain extent, the farmers that we've partnered with to apply to grow medicinally here, they grew for a large pharmaceutical company who I'm not allowed to name, but it's not going to be difficult to work out who they are. And they said, it's not by chance that we chose to do what we did in the UK, because we have access to science, we have access to the brains, we have access to the intellectual capital. So I think those things do need to be brought to bear, especially when you're talking medicinal and when you start to talk about these more specialized high CBD products and some of the strain work that's going on around the place. So I wouldn't rule out the UK. And it's a whole other story about actually growing in the UK environment, because everyone says you need sun. We are able to create 25-degree conditions under polytunnels in the UK. And we have experience doing this with our farmers. So there's a lot of opportunity, I think, in this part of the world. And we all know that capital here, there's a lot of capital in the UK, and the mining space is not looking so hot. So some of it is chasing homes at the moment. So hopefully that's helpful, Graham.
Yeah. Does anyone have anything to add to that? I mean, this would be, I think we lost Patrick from Supreme, because I know this would be up his alley. I mean, even like I can throw this over even to Ronnie, like, you know, when we talk about hubs and international hubs outside of North America and raising capital, you know, should we be considering the Tel Aviv, or should companies seriously consider the Tel Aviv Stock Exchange? Like, I personally hear mixed reviews, you know, and Ronnie, sorry, I know you're muted, but what's your thoughts on that?
Can you hear me?
Yep, there you are.
Okay. Tel Aviv Stock Exchange is a highly regulated stock exchange. There were some RTOs, I think about 8 or 7 of cannabis companies. I wouldn't think that a foreign company would come here and actually raise capital, because none of those companies have raised substantial capital. So, you know, Tel Aviv is a no for me. Highly regulated. I don't see the Israeli regulators issuing a prospectus or approving a prospectus to actually list and raise capital in Tel Aviv. I had a question about London. What was the last cannabis company that was actually listed in London? Do you know?
Pure cannabis. So we've had Sativa, we've had us, Ananda Developments. There's a reverse happening on to Standard at the moment, Spinnaker Opportunities, which is reversing an Israeli vaping business, I think, into it, but it's an R&D business. There's sorry, Ronnie?
That's already a few months in place. It hasn't closed, has it?
Complete. No. They suspended in February, and they're still in documentation. And it's the same thing you're talking about in Israel. You know, you're dealing with the UKLA, and it's not that they have a view about cannabis, but they will be very, very particular about the legalities and making sure that they are covered on every eventuality. And then you've got Highland Resources, which has just become Zoetics. So there's a couple of companies that have morphed into the cannabis space off the back of, say, a mining deal or whatever, where they've started to grow cannabis on their ground, those sorts of things. But there's only, there's a handful of us at the moment. And as I say, the path that we've chosen, my background's capital markets, metals and mining, 25 years in Africa. So capital markets are sort of my thing. And the approach we've taken is to create a listed footprint, for better or worse, and then try and grow with the business, but certainly finding it very interesting to see what's going on in other jurisdictions. But you're right, Ronnie, here we expected a rush of capital to situations here off the back of what had happened in Australia and Canada, and it didn't eventuate. But this industry is not going anywhere. And what I hope is that when I listen to the conversations on this conference, for example, the focus on fundamentals, I think we will start with that focus on fundamentals from the beginning. So we won't go through the selling blue sky and then trying to wind things back to fundamentals. I think we can start to grow a sensible business and a sensible sector based on fundamentals.
Okay. Anyone else want to add? Okay, so there's questions coming in from the audience, so I figure I'll just start running through them. And if someone wants to jump in, because the content varies quite substantially. So the first question is from Augustine. What are your considerations in regards to growth perspectives on pharmaceutical products, such as Epidiolex, in comparison to CBD supplements generally being sold today? Do you believe pharmaceutical regulations of CBD, once in place, will disrupt the CBD supplements market? Does anyone have comment on whether or not CBD pharmaceutical will disrupt CBD supplemental? I mean, I know, Spencer, you're in the infused beverages section.
Yeah, listen, I mean, there's just such a wide variety of CBD products that are available on the market today. I've even seen an advertisement for CBD infused leggings, believe it or not. So I saw that recently, had a bit of a chuckle. So, will the pharma industry disrupt it? Certainly, I think there's room for them to carve out a niche. I still believe a lot of the over-the-counter products will do well. You can find CBD products across America right now, whether it's convenience stores, vitamin shops, grocers, you name it. I think it will I think there's certainly room for success for the farm industry to come in with a product that has, some proven, I guess, therapeutic benefits, whereas the products today, as you know, we're not making any claims whatsoever. We're not able to do that, as we've seen with the FDA letter to Curaleaf, for example. We steer clear from that. So I think with more R&D coming in, certainly there's room, but I think the other products will do well as well.
Yeah, I mean, looking at the domestic, sorry, after
sorry,
you.
go ahead. Okay, I was going to comment. I definitely agree with Spencer here that there's a large opportunity, and I think the R&D aspect is critical. There was a recent study done by Leafly where they tested 47 products, CBD products, and about half of them were able to fall within a small deviation of what the actual dosage was intended. The other half actually failed to even come close. It was either 0% CBD actually as efficacy, or all the way up to 150%. So until that issue is solved and there's more R&D and efficacy and control being placed into these wide categories of CBD, the farm industry has that upper hand. But I think, what we're seeing is a mass saturation of products, and CBD is essentially becoming the next caffeine. So there's a lot of regulations that need to be put in place in order to control this growth, but it's definitely an opportunistic time to be invested into these products.
Yeah, and actually to echo or to build on what Ben's saying, I think the caffeine analogy is an interesting one. I think where it potentially is tested is the fact that unlike caffeine, CBD is actually part of, it is the primary active ingredient of a drug that's been approved by the FDA in the US, Epidiolex, right? And so, again, I apologize, I've got a very US focused practice, and therefore that's where my personal experience is, even if others at the firm aren't. But from a US perspective, you're talking about uncharted territory where you've got something that is both an FDA approved prescription only pharmaceutical active ingredient, and also is present in essentially food products. This is all an artifact, frankly, of what I describe as being part of an industry that predates industrialization on the one hand, and yet on the other hand is only just now coming into a regulatory, even gray area, frankly. And this is going to be something that's going to continue to test the FDA regime, the USDA regime, et cetera, going forward. It's exciting, which is, when you're talking to lawyers, exciting is another way of saying expensive. But it ends up, I think this is something where, companies who get out in front on this and really take, strategic approaches to how to deal with FDA issues and how to deal with similar regulatory issues are going to be the ones who get to profit from it.
Yeah, I think that we've got some really interesting market dynamics that are happening here, where you've got consumers that see a benefit of a product that they see as a functional food, and at the same time you've got the FDA that has created this this issue with Epidiolex. So it's going to be interesting. Ben, to that specific survey, I think it really depends. It's really important for the individual manufacturers to make sure that we're bringing quality products to market, right? And that's where there's a struggle between these small startups, these small mom and pop type of shops, versus true high-end commercialization of CPG products. No one is looking to be able to have a differing onset time, or a differing quality of experience, or a differing experience from one time they try the product to the next. It's got to be consistent in order for it to be adopted by the mass markets. And I think it's behovent on the industry to really increase the quality of what's going out into the marketplace and truly self-policing when it comes to that.
Right, and just going back to James and Ben's point, so what some companies can do in the CBD sector to differentiate themselves, and what we've seen has just become a sea of competition. One thing we're looking at is called GRAS affirmation status. So it stands for generally regarded as safe. And that's something that a lot of the big box retailers, for example, will be more willing to work with your company if you have a status like that. That's gone through, it's quite an onerous process. It's time intensive. But once you do receive that generally regarded as safe, more brick and mortar retailers are willing to work with you. It gives that consumer confidence in your product, so you don't end up being a product like Ben mentioned in those studies that have potentially zero CBD in the product. So there are things that companies can do to differentiate themselves.
Okay, great, thanks.
And we're working towards that.
Yeah, and also I think we all need to accept that, GRAS in this context is yet another of the great puns within this industry.
Sure, yeah, I agree.
On an Australian and perhaps in the countries where there are public subsidies for pharmaceuticals, there's an extra spin on this. So the minute you have a drug that becomes registered, let's say with the example of Epidiolex, that's FDA registered, it becomes a matter of economics that no one's then going to buy CBD, even if it's an identical product of a similar quality, with no other changes, with beautiful packaging. No one's going to buy the same product when even a more expensive product is available for free when it's subsidized by the government. So in countries like Australia, where we have a pharmaceutical benefit scheme where the government either fully subsidizes or co-pays the majority of your product cost, if I can buy a product in the supermarket shelf for where I'm paying out of my own pocket, it's not going to have the same appeal as a prescribed product. In addition to that, there's an argument to be made that a doctor endorsed or a physician endorsed product just carries higher gravitas as well. You may be aware that in other countries, so this is UK, Australia, New Zealand, the countries that are currently pure play medical industries for the cannabis world, there's the FDA authorized pathway for prescribing, or TGA or EMA, depending on which jurisdiction. And then there's this off-label prescribing pathway. It's called Special Access Scheme in Australia. It's called Pink Slips or off-label in the UK, and a similar name in New Zealand as well. And then thirdly, this kind of nutraceutical market, which hasn't really matured in Australia or New Zealand yet, but it's pretty big in England, as we've heard before. Now, the minute you have a TGA registered product, you immediately cannibalize or kill off anything that was the off-label prescribing. I'll give you a good example. So Sativex, which is a GW Pharma product, as you guys would know, is licensed in Australia for MS with moderate spasticity. So that makes it impossible for a physician to prescribe any other off-label product. So, an Aurora or a Canopy or Supreme product, I can no longer prescribe that for MS with moderate spasticity because there's already a listed product. There's already an FDA registered product that exists. It then sort of removes my ability as a physician to be able to prescribe an alternative product in an off-label manner. So there's a bit of a turf war, a bit of a sort of a land grab happening at the moment, where you almost want to be the global manufacturer that's capturing as many of those therapeutic areas and owning that space as an FDA registered product. GW Pharma is light years ahead of most people in this space, although there's a few other North American companies, Insys, Cara Therapeutics, there's a few Israeli companies as well also in this space that you guys would have heard of. But it seems to be that in those kind of medical markets, it will cause a fundamental shift when we have more FDA registered products.
Thank you, Sue. Okay, so we only have a few minutes remaining, and then we got to run into the one-on-ones. So I'm just gonna, unfortunately, I only have time to ask one more question. And actually this one I'm gonna direct to Peter, because I'd be interested to get your perspective. I know you're not necessarily an equity fund, but it sounds like it's an equity loan, convertible loan mix. So the question is from Andrew from the Oasis Fund. So they're a California-based real estate with 24 licensed operators. They're looking to get an equity investors or convertible loan secured by the first deed for CAPEX/TI improvements from any investor who will balance the interest payments for a year and in return obtain a healthy discount to the next round in the case of conversion. The conversion entitles to memberships in both real estate portfolio of the group as well as operator licenses. So I'm just curious so the thing is, when we cross leverage all regarding assets of the group and complete one build at a time, they need a line of credit of 10 to 30 million deployed within 7 to 9 months. Is this something that you would look at, for example?
From a pure secured lender perspective, it's not really something we would look at, because when you break down what those assets are, they're really not hard monetizable assets. Things like TI to a lease is hard to value in an aftermarket. It's really only valuable to an operator. To be an operator, you have to get a license. I think we touched maybe on this earlier, that it's really hard to transfer licenses. There was talk about how bankruptcy in the U.S. is a federal law, and lenders really can't rely on a bankruptcy framework to seize assets. There are processes in place. There was a license that was auctioned off, and it was in a bankruptcy situation, and value was created. But things like licenses and TI improvements, really hard to lend against. This definitely sounds more like an equity type situation. We talk to guys like them. We've got licenses. We need money now to build out our infrastructure, and those are equity-like investments. Sounds like he wants to structure this kind of as a convert, and there are markets out there for convertible type instruments, but those usually come from equity type investors. That real estate, that's a great asset to lend against. But most companies in this industry don't own the real estate, and they don't own the real estate anymore.
Well, he just actually made a comment that he says they do own the real estate or the RE assets. So I don't know
if they own the real estate, they have the deed, then that is a very leverageable asset, and there is a huge market to lend against that. And when we look at the collateral on the companies that we lend to, you start with real estate, and then it's the receivables and inventory and equipment. But real estate is a fantastic asset. There's a ton of sale leaseback. IIPR being the big public company that does it, and a lot of companies are now looking at their balance sheet, looking at, okay, what assets can I leverage and lend against to maybe avoid the equity markets, and you start with the real estate. There's a very vibrant market for lending against real estate.
Oh, perfect. Thanks, Peter. Andrea, hopefully that answers your question. So I want to say thank you for participating. I know it was a bit of a slog when doing this all under one sort of discussion. And like I kind of mentioned at the beginning of the conference, we are still experimenting with this virtual conference style. What's the best from an interactive standpoint, and how can we bring everyone value? So to that point, as we move on to the one-on-ones, if there's any panelists, if any of you would like to take a one-on-one with a fellow participating panelist, just please message Jess, and you can do that within the next 5 to 10 minutes. For the rest, I think we've already scheduled a bunch of one-on-ones, so Jess will help you coordinate with those. So she'll be the point of contact. Otherwise, I just want to say thank you to everyone, and I really appreciate your time. Thanks so much. Very insightful.
Thank you very much.
Thanks, everyone.
Thanks, Graham.
All right. Till next time.
And shout out to Peter for us, the other West Coast folks actually waking up early to do this.
Yeah. As well as like the Australian folks.
I was going to say.
Worldwide, it's the problem. There's no good time to do it, right?
It was hard to get up after a 49ers win last night. Very excited out here in the Bay Area. So.
Well, I appreciate everyone's time and taking the time to do this call. It was very, very valuable. Thanks so much.
Cheers.
Cheers, guys.
Thank
Bye
you.
now.